Hi, we're at the ICSC convention, the RECon show in Las Vegas, and I'm really happy to have Jerry Anderson, the owner of the license for the Florida Sperry Van Ness market. Jerry?
Ian, thank you for having me.
Thanks for coming. Is the CMBS market coming back? Do you see it improving?
Well, you know that we work pretty hard in that market, and yes, it is improving. However, the amount of distressed real estate, the amount in default, continues to rise. Mm-hmm. So while the market is back in terms of some loans coming out, we have this huge wave of distressed real estate, CMBS real estate, as referenced, that is currently in default. So it's a concern for all of us.
How are the banks dealing with all this? Are they doing a good job? Do they seem to know what real estate is about, or are they handling it well?
Well, that's almost a loaded question, if you will, because if you'll recall, and that wasn't too many years ago, we all sat around saying, okay, we got $180 billion worth of real estate that's going to be distressed. And many of our competitors, just like Sperry Van Ness, we ramped up our old RTC guys, you know, people that had been there, done that, and had a t-shirt, and we said there's going to be an outflow of commercial real estate coming from the banks. It's all going to be REO. It's going to hit the market at once. Get ready, folks, here it comes. It never came.
Yeah.
We, like others, put our distressed asset group together actually pretty early in 2008, and that distressed wave never really hit.
Yeah.
So your question is, how are the banks handling it? Well, a lot of the banks had trouble handling the reserves. They didn't have enough capital reserves to be able to sell that REO, so they chose, you know, you've heard the phrases, pretend and extend.
Yeah.
You know, kick the can down the road. That's what
on the sidelines.
On the sidelines. That's what all that was about. So it's just now that some of the banks are starting to get a little more capital reserves that they're going to be able to actually sell those properties through REO. But most brokers, and a lot of our guys as well, we chased the REO business.
Yeah.
And the business really wasn't there. And we literally had to call an audible at the line for our distressed assets group. And what I mean by that is we called the audible and said we can't sit around and wait on the REO business, because it may not be there. It may not be there from banks. It may not be there from insurance companies. It's probably not going to be there from special servicers.
Yeah.
So we need to get involved earlier in what we call the asset recovery continuum.
Tell me about that. I was going to ask you about that. What's your strategy?
Well, the strategy is a little different than some others. And we quickly realized, that's the audible that I referred to at the line, we quickly realized that we needed to get involved in what we call the asset recovery continuum much earlier. And think about it for a second. You have a performing loan, a borrower gets in trouble, it becomes a non-performing loan. Yeah. That non-performing loan starts to get ugly. It could be litigation, foreclosure, bankruptcy. Eventually a bank may have to take, or a lender may have to take the property back, and it pops out as an REO.
Yeah.
That's where most of us were focused. The truth of the matter is the banks, the borrowers, the insurance companies, the special servicers needed help much earlier in the continuum. What we did at Sperry Van Ness through our distressed assets group is we teamed up with a loan sales advisory firm, one of the largest in the country, Benewolf, located out in Oklahoma. We teamed with Benewolf for loan sales. So now we have, if you go to our website, svnart.com, you will see on svnart.com loans for sale. That's earlier in the continuum. Some of those are performing loans, some of those are non-performing loans. Yeah. Now in the CMBS world, we needed to reach out and bring in a partner to our distressed asset team that could help us with CMBS workouts. And we reached out to R.W. Klein. Many people know the name Bob Klein, very active in the distressed asset world, CMBS workouts. So now we can help a borrower, whether they're in trouble with a bank, in trouble with an insurance company, in trouble with a CMBS loan, we can from the borrower side, we can help them work it out with Bob Klein. If we're talking to the bank may say, we do not want to own that underlying asset as collateral. Now we can help them sell the loan. So we have really gotten involved in that continuum from 12 o'clock all the way around the clock, if you will. Because that's where the clients, the borrowers, and the banks need help.
Any property sectors that you're seeing that are more affected than others? I mean, we're at a retail conference. How's retail looking?
Well, you know, that $180 billion that we all saw coming through Real Capital Analytics, Bob White and his team, they told us in 2009 that's what's coming.
Yeah.
Top of the list was retail.
Yeah.
And right behind retail were hotels, right?
Yeah.
And actually right behind that was multifamily. But look how well multifamily.
Is popping, you know.
Hot, right?
Yeah.
It's hot. So multifamily, and for a lot of other reasons, I think the multifamily brokers and the multifamily owners would tell you because of what's happened in the single family residential arena has driven that multifamily. So retail is still at the top of the list, and there are a lot of shopping centers, regardless of the underlying financial structure, maybe even being sound, these centers are not going to be rented out. No tenants, no NOI. If you don't have NOI, you can't pay your debt service.
Yeah. Well, Jerry, thanks for coming by. I appreciate it. And thanks for tuning in to Globe Street TV.